Good morning, guys. I'm recording this video 10 minutes to 11 on May 28, Wednesday. So we are in the Euro USD. We're going to review this currency pair and see where we are. So this is the Euro USD daily chart. I always like to start. You always have to see the big picture. One detail that I want to comment in this video, because somebody asked me for, when you do the Fibonacci retracement to find your resistance and support, or your support and resistance, you always can go from the top to the bottom, or from the bottom to the top. Me personally, I like to, when I'm looking for the retracement, I like to come from the top to the bottom. It doesn't matter, it just changes the percentage. When you do in the other and the opposite side, the 23% it will be where the 78 is more or less, and the other way around. But to me, this is a correct way. So I always like and teach, do it from the top to the bottom, because you're looking for the retracement. So basically you're looking for this way down. So it's very important to look always the daily chart to see the big picture. When you throw the Fibonacci in the daily chart, this support and the resistance and support, they're going to be stronger if you're doing a small time frame. The small time frame, the less stronger is this support and resistance. So you can do it in the daily and work in, let's say, in an hourly or 15 minutes, it doesn't matter. Okay, so how we look the euro right here, I'll definitely do a follow-up. This bar, today's bar, break the low and continue going down. The next support we have with the 78% of this Fibonacci, that the number is $1.1274. So now we go down to the hourly chart. So I wanted you guys to see something on the hourly chart, which is very important. I think it was in the last video, on the video before, I did this angle explaining the trend and how to use this trend line. And it's very important to understand that part. So you have this support that I have right here. Let me show you guys, come from this top. You can see that is the Fibonacci coming from this top. And this one right here is not part of the Fibonacci retracement. It's just a line. It's a horizontal line that I throw from this top to see another support. You can see right here, when the price went down and created this ABC right here, above the 61% that I comment to you guys, how it's above that number, meaning that the euro against the US dollar is still very strong. And you see that line, how many top go to that level and went down, to that level, went down, and the price is still under that price. So that price is 14.04, you can say 14.00, $1.1400. So on Sunday night, it went all the way up, hit this resistance, went down, hit it again, create a double top right there. So you got an ABC right there, and the market starting to fall from there. So yesterday, or the day before yesterday, when the market went down and hit the trend line and went all the way up, we was waiting to see if we see the structure formation around this number, around this price, and didn't happen. Why? Because the price cannot sustain that level, and the market went down again and break that line. And after that, yesterday, it did this consolidation on the trend line, showing you guys there's not enough interest to the upside. So what you have to do there, you just short there, or if you are short from here, you just move your stop loss down here, down here, down here, and you holding. As right now, you can see it's starting to try to get an ABC formation right here, but it's not enough strength. And you see how this hourly chart bar, it went all the way up and then starting to lose fuel. Basically, it has no power, no buying interest to stay above. So what I think about this is that this is going to try to reach this bar right here, this line right here, which is the Fibonacci 78%, 1274. Now, how I know that is an important support? This is very simple. When the market came from the high of the market, hit that line, that price, and rebound. Went all the way down, hit it again, and rebound. If this type of analysis is something that you need to do. You need to open the chart and see what happened in the past, where whatever happened in the past is going to project to the future. That's the type of analysis you need to learn and do. So you see right here how many times it was hit before break. It break, went to the downside, hit, becomes resistant. So here was a support. It support all this touch right here, and the third touch, break it, rebound, and then went all the way down. And this is something I want you guys to learn. If we break, don't sell right there because it break. A lot of people do that. That's they break out or sellers or buyers, and that is a big mistake that I was doing like way back. I used to do that and lose a lot of money. When they sell a lot of money, I lose a lot of money and struggle a lot with that technique. They break out buyers or break out sellers. So when you see they break, you just wait, rebound, retouch. If you see they cannot sustain the price above that line, guy, sell. Short the guy or short the whatever you're doing because it's going to fall. So the next move went all the way down, and then from there it's starting to climb up. ABC formation, went to the price again, went down, hit it again, went down. Now, when you see it's hidden by twice in very close range, like you can see right here, we are in the hourly chart, so it's a few hours in between those two touch. And the market went down, it couldn't break that low, you already know that the market going to continue. So this type of analysis, that's how you learn. You go and back data and you analyze the chart, and that's how you learn. So when it break, it doesn't matter, guys, it doesn't matter if you make a mistake. I do mistake every day still doing, and I want to hit my head because I'm doing something that I already know, but it's human mistake. But the most you learn from the past, less you're going to repeat that mistake. So when you see the price break, go back down. You can see right here, it break in the top, it's a resistance, right here is support. So it break, go back down again, retouch, and go. So now is when this become interesting. You see the high right there, the or horizontal line that we draw. You can see the price hit that line again and went all the way down. So it's not enough strength to keep the price going up and up. So now, this morning, this was yesterday, basically. It went down, retouched that area, go back up. The price cannot continue. He found no buyer interest. You can see how he reached this bottom right here. If we draw a horizontal line right there, you can see this bottom right here. You can see how it's a very conjunction area. You see how many bar and how many top, and the price go down. Happen the same right here. Touch it, can sustain, go down, touch it, can sustain. That was this morning and go down again. Now, I think the price is going to go down to this 78%, which is, like I say, $12.74, $1.1274, because we have a lot of touch in that price. So now it's a support. So it tried to become an ABC, to create an ABC and a structure right here, couldn't sustain. So now we go down to 15 minutes to even see more close to the chart. You can see the price right here. You can see the price right here, how hit the bar, went down. You break it, retouch, went down, break it, cannot sustain the price, went down, and hit it, and went down again, and right now it's going to continue down. Now, if you hit this short on Tuesday, your stop loss is right here. You move it down here, down here, down here, and now down here. So you are right here. You got the profit from here to here. Guys, it's a lot of points. And you have two ways to work the market. You can be a hit and runner, or you can be a swing trader. Hit and run it is like you reduce time on the market. When you reduce time on the market, you reduce risk. You basically go in and out. If you have a huge account and you every day are capable to hit 10 to 20 pip with good amount of money, you make a safe, good amount of money. This is very simple. Every day you look for something like this, a touch on the market, and then you put 10, 20 pips with a lot of contracts, loads. So you make a lot of money. Basically, it's no secret. It's safe because you just hit and run. Go. That's it. Like as of right now, you're not going in the market right here because you don't know what the market is going to do. The people went in the market from here have the time to see what to do. But right here, you're not going to show the market right here and not buy it definitely from here. Because yes, it's creating an ABC right here, but you have a rejection from this top and happen again and again and again. So you already know that something is pushing the price to the downside. So the momentum is to the downside. It's getting no support in this area yet. So maybe they need to go a little down or maybe just break this low and rebound. So you have to look for that. But once you are in the market, let's say it go down, hit this price, 274, strong support, and then rebound from there, you just put your entry, your stop loss right there. You put 10, 20 pip and you put, I don't know, 200,000, 500,000 low. And guess what? You're going to make a lot of money and you're going to be a few minutes in the market. You just need to wait. Learn how to wait. Train yourself how to wait. Use this demos account to train yourself how to wait, like you are a sniper. I told you guys the other day, that is a great way to make money. Forget about if the market going to run up and down. If you are able to get just a 10p and you do a great leverage on 10p, you're going to be just I can say, few minutes on the market. If you wait for the right entry, you need to learn market structure, market mechanic, and leverage. Know how to leverage. If you have a good position because the market went all the way down, it's down here. You have the ABC, the double bottom, and the whole structure, the whole market mechanics is creating down there. You can leverage because you are close. Your risk is small risk. But if you try to go long right here and your stop loss is down here, you should not leverage so much because you got a lot of risk. So you have to learn how to run those numbers in order to make good money with this, okay? So to end this conversation, the euro, you guys should wait to see what happened. Let's go to an hour to see what happened. And this price right here, this price is, remember, 78% of the market retracement coming from the top, coming from the main top, remember, double top, double bottom. Right now, it can create, this can become a double top right here between this, and the market can go all the way south and go down. It's a lot going on between Russia, Euro, United States, Iran, Israel. It's a lot going on in the world right now. And always remember, the strongest military in the world is United States. What I just mentioned this to you guys. Why do you think I mentioned this? It's simple. The US dollar is our currency. And if something happens in the world, people going to move the money to the US dollar. So if we go to the index, you can see that this formation in the index got a reason to be. We don't know what's going on. It could be economic decision. It could be because of war. It could be anything. But the chart is showing you ahead that something's going on and something happening that the US dollar is getting stronger. Remember, the US index is getting stronger. ABC formation, Fibonacci retracement, C is right here. Yesterday was a reverse day, a bar, and today we have a follow through. For some reason, the US dollar is kind of trying to reverse. If it's on the B, we are still to the downside with the US dollar. Remember that. Until we break and the price is sustained above the B, the market and the US dollar is still to the downside. It could break, retouch, and continue. It could break, retouch, consolidate, which is an accumulation and a distribution to the outside. So right now, that's what we're looking for. And that's how it looks. It looks like we have a strong formation right here. So let's go and see the Japanese yen. Same 10. Look at the Japanese yen, guys. It's doing the same thing. If you guys entered yesterday with me and the Japanese yen, we already have a couple cents, let's say a couple cents, and you wait. So you just need to move your stop loss through your entry and sit back and wait, because this is a free trade. Look at that. Look at the range right here. See ABC, and the market starting to run. Just pay attention to whatever is going on, but the US dollar is starting to look stronger. That's why you see the euro going down, the Japanese yen going up, because this is the US dollar front, and the US index formation look like a stronger structure. Okay, so the next one is going to be the GBP USD. So same thing, you see the GBP USD. Let me just remove that from there. So the GBP USD is coming down too with a nice follow through. We have this bar the day before, break the low. Today we had a follow through breaking the low. Remember what I said yesterday, we had to wait and see when the price touch this level right here, which is the 100% of this two swing, 34.34. Until now, what we have as a low is 34.50. We are very close. We can count on that. So we have to wait for the retouch right there. Let's go down to 15 minutes to see what happened. When this happened to you guys, you just go right here and you reset the price scale, and that's it. It's going to fix the scale of the price. So right here, you see how it create the ABC, break the low, and it's starting to go up, but it don't look like it is any interest yet to the outside. We don't know yet. So that's what you can see in 15 minutes. On an hour chart, it's the same thing. He haven't touched this bottom. I really think it should be down here. And from there, you see how this area is very congested. So we need to see when it touch that price, what's going to happen. Right there, I'm not going long, I'm not going short. I don't touch the British pound. The British pound good move was yesterday or this morning. Right now, you just got to leave it alone and wait and see. And the euro, same thing. You are the euro right here. You can see that the euro is fighting that formation. And let's see in the next couple hours what will happen. Okay, this is all I got for you guys in Forex today. So nothing, I see you guys in the next video. Hope you guys learn a lot in this video.